All right, the highlight for today, it's a good one. It's a breakout and then the return to the breakout chart pattern called where the stop started. We talk about a lot. There were some sell stops that came out underneath here and then here, as it would appear, right? Whether you call them or not, here is the um, S&P. That's number one. And the market did something similar in the NASDAQ. Right in here, this is the NASDAQ, the NQ. On this side, this is the S&P mini on this side. But what you see here is the NASDAQ have a consolidation box, and they broke through it, and they had some aggressive sell stops. Not a coincidence it comes back. That's why we have a red line there for potential resistance. All right. Same thing essentially happened. Red line, resistance, not a coincidence. I don't get short up there. However, when a little later than this in here was around the time that the NASDAQ had resistance. And so I looked and said, and I actually said this after I did it, I said I should have got short in the NASDAQ. This was working faster to the downside. But this one eventually came off pretty decent to make lower lows at the time in the ES. And it was predicated on the fact that there was some small longs, some small shorts that puked in that area that we see on another chart. And then the fact that you had the NASDAQ that probably had some pretty good resistance, it was going to look like it did and head lower. But that's not why this is a highlight. This is a highlight because with the last piece that I had, I was quick to get the hell out of it. And remember, it's a short because I had seen something that might create a lot of this, and that was rejection. And so the market gets through those lows below this yellow line and quickly jumps back up. And that's when I say, you know what? Before it jumps up again, I have a feeling it's going to jump up again, just based on a rejection off the low. And you got to be quick because it doesn't matter if you got in up here, if you got short up here, if you got short up here, or hell, if you got short bad down here. You still got to react to what you think the probabilities are from being in this business so long. It's not as much intuitive, or it's not just reactionary. It's the experience of, hey, I know what's going to, I've seen this movie before type of analogy. And so this rejection was easier to call here. And I did, not just in exiting a trade early, but also getting, people in a position to say, you know what, this market has some more upside. Now, it does, and it comes up to here. Then something really interesting happened. It has a big break right there, followed by a big rally right to there. And before it goes all the way up to where it ended up going to, right in here, I said, that is a transition moment and a half. Not only did you have the rejection off the lows here that ran price to there, but then you had a transition where you give the bears an opportunity to think it's going to go lower, and then you just jam it right in their face. I said, this is some pretty bullishness. This is some pretty good bullishness. The right side's going to be the upside for a while. And don't try to pick resistance, or there was a VWAP that came in, I think, at 18 or something. I said, maybe you can get out of a long if you're long, but be careful getting short. And the market ran eventually all the way up to the 40s. And sure enough, it comes in, it respects some good support right in here. This green line comes out because it got fast right through the VWAP. And when it moves through a VWAP like that, you get a lot of knuckleheads trying to get short. And the ones who get short and can't get out, they're trying to bid to get out over here. And therein lies the reason why it becomes subsequent support. When you get an area that it moves fast through, you generally have good subsequent support. And then you could qualify a trade to play it from the long side if you think there's more upside. The point is to be able to see it, scratch your head that there's some rejection there, and then definitely do more than scratch your head to think that the upside is the right side. And don't get into the point where you think it's going to go to 45. Unless it goes to 45, you're wrong. All you have to do is say, hey, there's some pretty good upside left on this. There's going to be, this should not be a surprise. And that's what I talked about here instead of waiting up here. So you could be bearish and change your mind for the right reasons. Like right in here was when it moved lower like this, what do we say? Hey, this market might have to respect this downside, and then wham, it came back and say, nope, these guys are dead and they're in trouble. Plus, You add the context, and this is really important. We came into today's session bearish. Everybody and their godson was bearish and looking to get short. I think we had 78% of a bearish pull this morning. And you know what? It should have been that high. We were opening up off a weak close yesterday, lower than yesterday's low. So of course it should have been bearish. That's not the surprise. The surprise is if there's a surprise among the 78% of the people who are bearish, and that therein lies the opportunity to see people who are bearish because of the open, and they're bearish and they're bearish all in here. They're getting short all the way up because of the gap open lower, and they're like, how could this happen? It was a weak close yesterday. 78% of people were bearish. It's got to go down. And so when you jump into the previous day's range on a gap open lower, you really have a good chance of good upside reversal. And that's what happened in the continuation of this move. But it all started down in here instead of having to wait up here to make that decision. So you have a sell stops that get let out, subsequent resistance, both in the ES and right here in the NASDAQ. You get all of that is support resistance based on order flow, not some funny math that gives you the reason why it's going to stop there. There's no magic potion. It's about people being stuck. Faster markets move through price, the better support resistance is going to lay out. So it does that in the NASDAQ. It does that in the ES. They make lower lows, and then wham, they come back in. Rejection is important to understand when you see it. You could see it and feel it. It's like being at a bar and you're sitting talking to a girl, you're trying to get her number, and you don't know if she likes you, and then she slaps you in the face. At that point, you know you're not going to get any further with her. You better leave. That's rejection. Now, I never had that happen to me, but I'm sure many people out there have. So you have to remember what rejection looks like, feels like when you're trading a market and reading a chart. You could be trading individual stocks. You could be trading futures. You could be trading options. You got to know what, and rejection doesn't have to just happen on highs and lows. It could lay in swing lows and swing highs like in here. This isn't the low of the day, but yet there was some really good rejection to say, hey, upside's right side, and you could say it down here instead of having to wait till it's too late. Hopefully this helped because today's highlight had a little bit of everything. It had sell stops that came out, which is order flow, how it laid subsequent resistance, how there was a little bit of a head fake look to go down to come up, rejection, and how you had the whole context of a bearish open turn to a reversal as we went through the morning. Make sure you're subscribing to this channel if you like it. We put out videos 5 times a week.